Get your popcorn ready. Because it's really happening, guys. It's really happening. Master your money for your future. Welcome to Budget for Life. My name is Jeremy. I'm not a professional YouTuber. I'm a financial advisor, but this video is not financial advice. In this video, we are going to, first of all, enjoy a little bit of overnight continued run on GME, but more importantly, break down the official proposal from Ryan Cohen / GameStop to acquire eBay. We're going to dissect it from a lot of angles tonight. Get in here. Okay. If you want to learn something, if you want to eat some popcorn together tonight. And by the way, thank you, of course, for all that are in here. Thank you for the likes. Thank you for the subs. If you want to be a part of the Pokey Sub Club, there's about 400 spots left. 3776. We're scaling Mount Fuji together. So would love for you to be a part of it. Thank you also to those who join the channel as fans and friends. 100% of the earnings of this channel go to DRS Book GME shares. And Power Packs did $122 million in revenue in Q1, which I can't wait to see disclosed in June. And the Infinity Pool is looking pretty stinking good. We've locked up 139 shares together that are up much more than 18.5% because this was based on the market close price of GME, which was like 26.53. So we've got another $300 in the gains, baby. We're about to be averaging up like crazy in here. That said, before I get into all of the dissecting, of course, I want to say, hey, Dolly, great to see you. Active Rehab. Hey, thanks. Active Rehab says, was waiting for you to go live. Yeah, sorry, I'm running late. I was making some popcorn. We call this dad-ass popcorn. I know what you're thinking. Is this some like family generational recipe that's been passed down? No. Okay, I am dada. It's my popcorn. But it's like some sugar and some Tony Chachere's. You know, some Cajun spice, a little sweet spice. Anyways, Rabbit Squirrel, what is up? Zimmer, great to see you. Zimmer said, what the F? Grape Ape, let's go. Yeah, we'll talk about the dilution impact. We'll get there. But yeah, there will be some dilution, but we don't actually know yet how much dilution. So 50% of eBay's payment is with GME shares, but the valuation of those shares is not determined yet because they haven't even agreed to the deal yet. So if GameStop happens to be trading at $1 trillion a share at the time of the pricing, well, then guess what? Not very much dilution. You know what I mean? So I do just want to say on the front end that whenever the deal is agreed to, I'm not sure if it'll be made public or not. If it's made public, it's game over. Just like the convertibles, right? Like, hey, the pricing dates for the convertibles will be blank from 2 p.m. to 3 p.m. Guess who's tweeting memes out the wazoo that day? Roaring freaking Kitty. If the pricing of the GME shares is made public, I mean, it's already, right? Before we even had this after hours movement, at 26.5, we had 77,000 calls land in the money. Then we had the news, the speculation that GameStop might be preparing an offer for eBay. And since then, we've had 2 more Wall Street Journal articles, so much sense in the synergies with it, some more details. And now GameStop has filed officially their proposal. Plenty of data here that we can go into together. But all of that is added buying pressure, right? And GameStop is already right now at the convertible bond threshold. You know, these convertibles, the 2.7 billion of it is at $28.91 a share, the conversion price. The other 1.5 is at 29.85. We are already pushing these thresholds that turns 4.2 billion from debt to dilution, which basically increases the net debt, or sorry, the net cash on GameStop's balance sheet, which then impacts the way that you would value GameStop as a company and pushes you up into the warrants conversion threshold of $32 a share. All that to say, there's plenty of pressure. If there's anyone out there that is short GME, I mean, what a horrible day. What a horrible day and a horrible life built on horrible decisions if you are short GME, in my opinion. But what am I saying? What am I saying? The dilution, we don't know the amount of the dilution yet, but we will get into it in this video. Speculatively, what could this mean for the float, etc., the valuation? But if the pricing is made public, and even if the pricing is not made public, just the reality of everything I was just going through, all these buying pressures that are potentially adding pressure to short sellers and adding squeeze risk, all of that is a storm that's moving in the right direction if you're long, in my opinion. Anyways, we'll dive into some details here. Nathan says, it's really happening. My statement for tomorrow. Active Rehab says, max pain for middle of June is about 17. What is up? It's night. Yo, yo. Hip hop. What is up? Great to see you. Yeah, pressure cooker on the convertible bond holders are positions for sure. Are we going to make it, chat? What's up, Zedgy? We're going to make it. OMG says, do I think Ryan may push Jimmy to above 80 to at the money and get enough cash to M&A? I mean, they're not going to get enough cash. Like, the deal is not a cash deal. This is the deal. It's 50% cash, 50% GME. What are the value, like how many shares of GME are required to come up with 28 billion? That's really the question. The offer is a $56 billion offer. They're saying we will pay you 28 billion in cash, and then we will pay you 28 billion in GME shares. How many shares are required is the question. So we don't know that yet because it's not knowable yet. But again, we'll dive into some math for real in this video. We're actually going to break this down. And why would this make sense for GameStop? Why would this make sense for eBay? What are the possibilities of what could happen over the coming weeks and months? Remember, Ryan Cohen forced his way into GameStop just like this. I mean, not literally exactly, but he bought a huge stake in GameStop. And then he said, here's what GameStop needs to do. And by the way, whether you like it or not, I'm going to run this thing. And GameStop said, we do not like it. We do not like it. And guess who won? Ryan Cohen. And then ultimately, guess who won? GameStop shareholders. Because GameStop's management was running this thing into the ground. Ryan Cohen comes in. It's all over. Right? A year later, GameStop becomes the meme stock poster child. Right? Roaring Kitty is the retail investor figurehead. Within a year later, they initiate cost-cutting and gross margin improvement efforts, which, by the way, is exactly what Ryan Cohen's plan is to do with eBay. Bankruptcy risk is officially alleviated as GameStop returns to profitability. This whole year that step is skipped with eBay because there's no bankruptcy risk with eBay. It's just increasing profitability, right? Collectibles, particularly Pokemon, emerge as the growth driver for the retail business. Also already done with eBay, right? They're already totally synergized with the collectibles business. And then in 2025, GameStop's legacy retail business becomes a true cash cow, and GameStop prepares for aggressive growth by acquisition. Guess what? This acquisition was announced not in Q2. It was announced right here at the end of Q1. Let's go, eBay. You gotta love it. What am I even talking about? I'm getting so distracted over here. We will talk about the math, why it makes sense. Why would eBay be inclined to approve this? And if management declines it, what could we expect to happen? And guess what? Ryan Cohen's going to win. Ryan Cohen is not entering into this fight to lose. He wants what he wants, and the man will get what he wants. He did it with GameStop. He's going to do it again with eBay. And probably it'll be even better if eBay tries to fight it, because the longer that eBay fights it, the more time that GameStop has to melt up related to the fundamental transformation that is already happening with GameStop, combined with power packs coming online, combined with shorts being squeezed out, Roaring Kitty coming back, adding pressure, whatever. And so if eBay fights this, GameStop continues to look better and better as time goes on. And GameStop's legacy management team, eBay's management team, will look worse and worse. This pop that they've seen is going to start reversing the other direction. This trend that they've seen the past 3 months, up 30%, that's going to start moving the other direction, because eBay has grown largely by acquisition. They don't have a lot of creative or like pioneering leadership. So ultimately, it makes sense for eBay, but if they want to fight it, it will end up in GameStop's best interest, because eBay will not appreciate at the same rate that GameStop is. So GameStop's negotiating power ultimately increases over time. So exciting. So exciting. What is up, everyone? Machete, great to see you. John 2 Day, what is up, brother? It is all coming together. The prophecy that's been foretold from the beginning. Some Granny says, not how I was planning on spending Sunday night, but here I am. Great to see you, man. I'm glad you're here. Hoogie Miles says there's still about 100 million shares available to dilute if the stock price goes on a run prior to the acquisition. All the free cash flow from the business could eventually go towards buying stock back, shares at a later date. Yeah, it's true. Like if GameStop squeezes to $250 a share, they could do an ATM and sell some shares and just have that cash on their balance sheet and use that cash for whatever they want to. That cash won't, like, it, in my opinion, if the eBay transaction hasn't gone through yet, it'd be crazy for GameStop to do that, because it's better for GameStop to capitalize on how many shares are required to come up with 28 billion for eBay. 28 billion in shares, paid in shares. You want the price per share to be as high as possible to limit that dilution, rather than kicking off a dilution before you're already going to dilute even more. And then you could really create a dilution snowball in the wrong direction. But it's true. They can dilute in other ways too if they want to. Hip Hop says, given their partnership with Power Packs, they must have already been in discussions, right? Surely everyone involved is aware this is going to happen. Possible. It's not definite. I mean, some people in eBay have known for at least some amount of weeks, but it's not a. It doesn't mean that they want to sell to Cohen just because they've known that he's starting to make a move. But ultimately, Cohen's doing a little bit more of a Carl Icahn. Some of the things that Cohen said in the this year as it relates to his acquisition targets, some of this was accurate. Some of this was kind of like a smokescreen. So like he was talking about Warren Buffett, and it's going to be similar to Berkshire Hathaway. Really, doing is more similar to Carl Icahn, hostile takeover of GME, hostile takeover of eBay. That is what Cohen has done post. And I mean, what is my opinion on Burry making the post on X saying Ryan should invest in something else? Yeah, I mean, my thoughts on, let me go to my, oh, sorry. If I go over here to my channel, Michael Burry, was this live? Oh, yeah. Michael GME full breakdown. This video here basically shares thoughts on Burry that haven't changed much at all in the 3 months since then. Basically, Michael Burry's not nearly as bullish on GameStop as I am. So the reality that he wants to buy something, like I think almost every single stocks he mentioned on his list were less than $10 billion in market cap. And like I've been saying consistently on my channel, I think he wants something that's at least $10 billion, right? At least a $10 billion acquisition, maybe as much as a $75 billion acquisition. Sure enough, a $56 billion acquisition is the bid that he is making for eBay. So I'm not surprised that Burry doesn't really see the vision, because he doesn't. Like, he made it pretty clear on his, which I break down in that video I just referenced. Like, he does not really believe in GameStop's retail business. He does not really believe in power packs as a meaningful needle mover. And Cohen buying eBay, or at this point, pursuing a purchase of eBay, is doubling down on power packs and GameStop's legacy retail bit. Like, collectibles and resale is what Cohen is trying to double down on and totally dominate, and going from there into dominating really all of e-commerce, really competing with Amazon, taking market share from Amazon, dominating Whatnot, taking market share from Whatnot, like becoming the peer-to-peer marketplace, which Amazon is run by peer-to-peer sellers. They just brand it as Amazon, right? It's fulfilled by Amazon, but Amazon's not really the store. Same thing as eBay, right? And Walmart has pivoted that way as well. But with eBay, you actually have a connection with the peer, and you can also have more official, like, authentication services that eBay has built out, that PSA has built out with graded cards, that when you're buying higher ticket items, you want to know it's legit. Walmart and Amazon are not built for those authentication processes. GameStop plus eBay would be. Anyways, I'm getting all sidetracked. So many comments. I'm really excited. This is great news, in my opinion, for GameStop. I just want to make that clear if I haven't already. But Michael Burry not being on board is not surprising to me, because he is not bullish on collectibles, genuinely. You can watch my video and you'll see it. He's also genuinely not bullish on GameStop's legacy retail business. And so Ryan Cohen doubling down, and really more than a double down, right? GameStop right now is a $12 billion company, and they're trying to $6 billion. So that's like more than a quintuple. That's a quintuple down. He's doing a quintuple down on businesses that Burry doesn't believe in. So yeah, he's probably like, no. And he's probably going to sell his shares just like he did when he was long GME in 2020. Got involved, and Ryan Cohen had way bigger vision and was way more aggressive than Burry. And Burry was like, I think I'm going to go ahead and sell. I'm up like, 60%. That's good. That's good with me. And then it went from $1 to freaking $80 a share. And Burry's like, maybe I should have held a little longer. He's probably gonna do the same thing again, honestly. He's like, oh, bummer. Anyways. Some Grady says, isn't most money invested in the stock market passively invested? It seems the biggest headline for long-term stock appreciation is S&P 500 inclusion. Well, yeah, S&P 500 inclusion becomes an inevitability either way, but especially if GameStop buys eBay. But even if they don't buy eBay, the technical pressure on top of the fundamental breakout, on top of power packs absolutely destroying, like you add it together and they are on pace to be S&P within a year. So with or without eBay, that becomes a huge technical buying pressure on GME, especially exacerbated by any amount of shorts that still exist in the stock. I don't know how to say your name, Arkaduza Pizzawowski. But you're right. Yeah, a lot of people have thought eBay has made the most natural sense. They obviously have the partnership with PSA. They have a lot more synergy with GameStop's business. And GameStop has kind of like sent some tea leaves as well. Like they sold the stapler on eBay for $250,000. I did think that was interesting that they sold it on eBay. GameStop is a store. They're a reseller. They don't have to do it on eBay. Why did they want to test out selling an item for $250,000 on eBay? Why give eBay 15% of that commission, right? You're a store, you have a website. Why don't you just like click an auction page on your website? But they tested on eBay. And then in December, they had a trade anything day. Bring anything into the store, we'll give you store credit, right? Like it's, even at the time, it seemed like, man, is GameStop going to start buying and selling anything? Are they going to move out of just video games, consoles, electronics, collectibles? Are they going to start expanding into a bona fide resale business? Well, now they're not just a bona fide resale business. They're about to be a bona fide consignment business where like we will sell your stuff for you and your trade-in credit. You're not just going to be able to buy stuff at GameStop with your trade-in credit. You're going to be able to buy whatever you want on eBay. Guess what's for sale on eBay? Everything. That increases. That's such a win for GameStop in terms of increasing the demand for or the supply of traded in assets, because people can do so much more with $1 on eBay or with $100 on eBay than they can with $100 at GameStop. And it brings way more sellers to eBay. It's just such a, anyways, a lot of people called it. It's been the most rumored name from the beginning. I was going kind of against the grain thinking, it makes too much sense, right? I just don't think Cohen wants to do that. And it's not quite as cheap, but ultimately it's eBay. So was I way off? Not really way off. A $40 to $50 billion retailer that is able to have like an omni-channel experience, online combined with physical, that is in the same industry, that is in the S&P 500. Like it's with a sleepy management team, right? That's underperformed the potential of where it could be. But yeah, eBay's, eBay's the name. What else? What else? I'm trying to catch up with chats, but you guys are going too fast. Hoogie says, if Ryan pulls this off, imagine what could possibly be next. It's true. Although I will say, one of the things we'll get, where does he say it? Where does he say it? Maybe not this one. This one. This one. Where is it? Where does he say it? I don't know. Is it in here? Anyways, we'll go through this line by line here in a little bit. So I don't even, but somewhere in one of these, he's basically saying like he will focus on eBay for years. So I don't think it will be like immediate that GameStop's going from eBay to the next thing. I think he's going to take some time to fix eBay and then eventually go after the next thing, you know, but not like right away. Yeah, Grape Ape said trade and anything day went well, I guess. For real. What's up, Brian? I disagree. Brian says it should be concerning that Michael Burry is not on board. Michael Burry has not been on board literally since Q1 of 2021 to now. All of this, or not on board, not on board, not on board. And then just right before he got back on board, you know, but like literally the entire transformation has not been on board with. He's not on board because he finally just got to a point where like, man, the valuation at this point is so low that I'm basically only buying cash with my cash, right? Like this market cap at 10 billion is worth less than the market cap at 13 billion if the convertibles will dilute. And it's almost impossible that they won't dilute because they still have 5 and 6 years before they would dilute. And even if they just invest that cash in T-bills, they'll earn enough cash to where they will be worth more than freaking $30 a share 6 years from now. So if I can pay cash and in exchange get cash plus a lottery ticket, that was. And so the fact lottery tickets, I scratched off the numbers. It's not the numbers I was hoping for. It's like, yeah, well, welcome. What's up? Thanks. 101 Xbox dude sent five gifted memberships. That's awesome, man. You're the first one to ever do that. That's cool. Thanks. Seriously, give it up. Kudos, Xbox dude. I appreciate that a bunch. I'm probably going to miss some of the chat. So yeah, if you want to make sure I see it, drop a super. I do appreciate it. It's not expected. You don't have to. Oh, cool. Look, some people claimed them super fast. SGN, Pragmatic, Grape Ape. So cool. Oh, and Jonathan sent me a goat trophy. No one's done that before. Look how cute that goat is. Can y'all see that? Oh, for jewels? I don't even know what jewels are. I'm like, guys, I say in every video I'm not a professional YouTuber, but I'm genuinely not. I got a trophy with some jewels. Jeez. Thanks, guys. I'm feeling excited. I'm excited to break this down further. But I am not concerned about Michael Burry one way or the other. If he gets on board, I'll be excited. He's welcome to become bullish on GME as far as I'm concerned, but he is not scary to me if he becomes like neutral or pessimistic, because that's what he's literally been for the entire past 5 years. Someone's saying like, what about if they are treated as a monopoly? I don't think eBay and GameStop are even close to a monopoly. Because at the end of the day, all they do is sell stuff. A monopoly on resale business. Well, resale is just how you acquire your inventory. Resale is just, hey, instead of paying a factory in China to make the thing that I'm selling, I'm going to pay John for his thing that I'm going to sell. So resale is not really a market. It's just like selling stuff. And if you're in the business of selling stuff peer-to-peer, well, guess what? Amazon is peer-to-peer. Walmart is peer-to-peer. Target might even be also. I don't know about Target, but like huge retailers that are connecting sellers and buyers. They are owning marketplaces. The biggest retailers own marketplaces. Amazon, Walmart, eBay. The most transaction volume is when you own. And Target, Amazon, Walmart are huge. I don't know why I don't think a monopoly risk is really an issue. PSA is getting close with card grading. But owns several of the top card graders. But GameStop and eBay, not even close to a monopoly risk, in my opinion. Xbox says, quotes Wall Street Journal tonight about eBay needing to be an Amazon competitor. Exactly what I was hoping to hear. Great comment, and yeah, can't wait to get into it. It's just so stinking good. Great Babe got, look at all this. It's so cool. Thanks, Xbox, dude. Thanks, Jonathan. Super cool. Oh, and Hip Hop sent me G's for 20 jewels. Okay, let's get into this financials. Oh, and a flower. Thanks. What do I do with this stuff? Can you, what do I do when I get when I get that flower? I can't do anything with it, right? It's just like a cool emoji in the chat. But then the goat one came up. Does that go on my channel? Asking you guys, do y'all know? On my home out there now? You know? I don't know. What, or is it just like for this chat? I don't know. Do you guys know? I really like those flowers and the goat. I hope I can do something with them. Oh, Hip Hop says I think it might be a small amount of revenue. Cool. Well, that's awesome too, because that's going to funnel straight in, going from 139 to whatever. Man, May May 21st will be whenever I get another couple $100 from April. And I'm buying shares for $100 a pop. I used to get $20 a month. I think I'm going to start getting about one share a month, which would be a great problem to have. Jonathan says, first time giving one of these. I assume it's like some kind of super chat. Well, cool. Thanks, Jonathan. I appreciate it. Thanks a bunch. Seriously. Most exciting super chat ever, because it's a trophy. Anyways, this article I never actually went through on my channel, but it's all speculation about what Cohen confirmed. So I'm not going to read through this article. The next day, yesterday, is not really that well written, but it just explains some of the synergies between eBay and GameStop, which I really did already cover in this video about GameStop acquiring eBay. Some of the reasons why it obviously makes sense. And also, GameStop also shares in these filings. This article, which came out like about an hour before these filings, does have some context that the filings themselves don't. So I want to get into that. And then we will go from there. I've never seen that go before. It showed up all over the chat's comments. Pretty cool. Very cool. Very cool. Unsolicited offer, $56 billion. Sees a path to make it a much bigger competitor to Amazon. We'll get into the details, but we know it's $125 a share. $6 billion comes out to. 50% of that's paid in cash. 50% of that's paid in stock. And again, we'll dive into the numbers, but I just want to say, if you're paying 50% of this in stock and you're thinking as a GameStop, what the heck? A $12 billion company is going to have to pay $28 billion in equity. How we're so screwed, right? Like, that's crazy dilution, right? Well, remember, you also own 100% of eBay, right? All of the shares of eBay are closed, and now you just have the shares of GameStop, which is now GameStop plus eBay. $8 billion in equity plus $12 billion in equity for a company that right now is a $46 billion company plus a $12 billion company, right? You're paying, you're diluting, but then you're adding to what your company is worth. If you think conservatively, eBay's only worth 40 billion, then at 40 billion plus 12 billion, you have a $52 billion company, and you only had to pay 28 billion worth of equity for a total of 30 billion in equity for a 50 plus billion company. Does that make sense? And then you still have a ton of debt. Your balance sheet is not as sexy, so you got some work to do, but the dilution is not really that big of a deal. If I was an eBay investor, like, you're getting a premium, like the dilution, those are the shares that you get to keep, is the 28 bill. You get 28 bill worth of equity value. So right now, let's say before this whole all this stuff picked up, they were at $85 a share, almost 50% less than where they're at now. So if you're an eBay long, 25 billion, and you think that all the gap from 25 to 56, or right now 46, if you think all of that is just because of Cohen, well, guess what? The 25 billion that you were worth back in February, we're going to give you we're going to give you all of that in equity. Or even if you want to say 90 a share, like let's say this was earnings, they're making a little bit of movement, 90 a share, $28 billion company. We are going to pay you $28 billion in equity. You're going to get every dollar of this equity without any dilution. And then this last, from 28 to 46, what's that? 18 billion. This 18 billion you've appreciated since then, a lot of that's because of us, right? Second of all, we will pay you an extra 10 billion for that 18 billion. Right? We're giving you all of the equity that you had earned, the whole worth of your company in the first week of March. We're letting you have in stock. The last 18 billion, test us if you want to, but you're not going to keep all of that. Not a part of the picture. But even if you want to cash out right now, we'll pay you almost, a time and a half, all the gains you've seen from here to there, when really you probably only deserved half of the gains you've gotten from here to there. I don't know if that made sense. We'll put it in spreadsheets and crunch it in numbers, but at a high level, it makes a lot of sense for eBay investors. What is up, Peter? Peter, welcome. Welcome. Newest. Go. Let's go, Peter. You'll see if you go to my channel, the posts, or like some of my whatever email, some of them are linked. I will add you to the GameStop spreadsheet if you want to be. Weirdo Shrine. Hey, the username fits. Username fits, weirdo. He says the F is a financial advisor doing on Robinhood. This is not where I trade client assets. This is where I look at user-friendly charts. I don't have. So chill. Lodo, great to see you. Chuck, great to see you. Paul, Battle Rat, love it. Herm, Daddy, Warren Icon. Great to see you guys. Just exciting stuff. So I'm thinking about turning eBay into something worth hundreds of billions. TD Bank, 20 billion in debt. So basically 20 billion in debt, 8 billion in the cash they already have, and then 28 billion in stock to make sure that eBay gets in stock full value that they had amassed post their Q4 earnings, which they had a strong Q4 earnings. I listened to the whole earnings call. It's like an hour and a half long. They made some moves, made another acquisition. eBay shareholders, you are getting all of these dollars. You're getting 28 billion in equity, and then you're getting 28 billion in cash on top of it for a company that is probably only worth somewhere around 28 billion. Right? All the cash is just, let me give you your first double in cash. I'll just give it to you now and then let Cohen run the show. And by the way, you'll end up with a lot more money, a lot more valuable business if Cohen's running the show. Okay, eBay investors? Okay. Huge opportunities to cut. Obviously, some overlap. No one's more qualified to run the eBay business than he is. some Wall Street analysts are already skeptical that Cohen could pull it off. Of course they are. Skeptical and scared. Skeptical and pooping their pants. If you want to call that skeptical. GameStop closed a lot of stores. He saw ways to integrate that he dives deeper into in the filings we'll read here in a minute. Stores becoming locations to collect and authenticate items for eBay sellers. And transitioning eBay into a live commerce market. It's so epic. I mean, this opportunity is just so GameStop 2.0 in so many ways, where Ryan Cohen sent the letter to the board in November of 2020 saying, hey, GameStop, the video is growing rapidly. It's changing. And you know what's happening? It's moving online. And you know what's happening? It's doing it without you. And if you don't move quick, you're going to be left behind. This is basically exactly what GameStop is saying to eBay. He's saying, look, eBay is changing. You're already online, but guess what? Retail is moving towards live, right? Online retail is moving towards like a high dopamine experience, right? Auctioning, finding deals, right? Being the first one in, like inside scoops, rush to first. It's limited quantity. It's live. It's connection with sellers. It is live. And if you don't get live soon, you're going to be left behind. And by the way, it's also authenticated, which is what eBay does. So kudos again to you, eBay. But guess what, eBay? You don't have a single store. It's the same thing that GameStop offered to PSA. Said, hey, PSA, you see all this growth that's happening in the graded card market. You want to know how much faster this could grow if you had, I don't know, 1,500 stores around the United States where people could submit cards to be graded in a way more user-friendly way. They don't have to print out this weird form. They don't have to ship it to this weird address, hope it comes back to them one day. The only people that are doing this, PSA, about it, that are way into it, right? The system. You don't have any casual people getting their cards graded, but if you let us, GameStop, be store front where cards get graded, you're grading way more cards. And don't you make money when you grade cards, PSA? Don't you make money when you store cards, PSA? Well, guess what? Let us be your store, and you're about to make bukus. And you know what Nat PSA said to Ryan Cohen? He said, that makes a lot of sense. And Ryan Cohen said, of course it does. That's why I brought it to you now. And now GameStop's doing the same thing with eBay. Saying, hey, eBay, don't you make money when you sell stuff on your platform? Isn't it like you get a transaction fee for that? Don't you take 15% transaction fee for that? But isn't it kind of labor intensive because you have to authenticate items that are of a certain value, and the value that you offer to people is that authentication? Otherwise, they would just be getting it from Walmart or Amazon, right? Or from Facebook Marketplace or auction, like estate sales, etc. Like they need to know it's authenticated, right? So it's actually pretty man-hour intensive. But how many people are actually selling on eBay? Oh, you mean there's way more stuff in America sitting in storage units because people don't know how to sell it and they don't want to sell it on Facebook because they're not trying to get freaking assaulted randomly because everyone's scared of selling on Facebook Marketplace for some reason. And they don't want to sell it on eBay because it requires like taking pictures and having like an account and like reviews, and I got to get a shipping label and a box, and I have to weigh it, and then I got to measure the box, and I got to bring it to the post office. And what if they didn't pay me enough for shipping and I undercharged for shipping, and now I'm actually losing money to ship out this thing? And guess what, eBay? Not very many people casually just sell something now and then for fun on eBay. Most people that sell on eBay are eBay sellers. That's not good for eBay. You know what, eBay? If you want to sell a lot more stuff on your website, why don't you let people bring stuff to us? We can, if you want to have 1,600 eBay, yeah, I think you do. Just a couple months ago, eBay spent like $1 or $2 billion to buy an app in Europe that sells, peer-to-peer clothes. It's probably a good opportunity, But hey, eBay, instead of shelling out billions of dollars when you're already net cash negative, what if we pay you 28 billion in cash and we let you keep all of your equity value from the first week of March of this year, and then we will give you 1,600 stores where then people can come get their stuff listed and they don't have to do the work. They can become very hobby level. They don't even know they're selling on eBay, right? They're just getting money. You take my stuff, give me money. And guess what? When they get money, you get money, eBay, because you always make money. 2.0. It's the same letter to a different company, more nicely worded, with a lot more cojones, a lot more proof of concept. Because now he's done it before, right? He didn't have his record. He didn't have his Chewy record on his letter to GameStop, right? He didn't need to either. With eBay, he's trying to be nice. He's trying to be nice to you, eBay, but he's saying, look, retail shifting towards live and authenticated, and you're not doing the live, it's you, and you're not doing nearly enough authenticating, and that's going to go right past you too. Because guess who does have stores? Walmart. Guess who does have stores? Target. Guess who does have stores? Amazon through Whole Foods. If anyone else starts authenticating, eBay, you're screwed. You're screwed, eBay. So guess what? Partner with us. Let us buy you out. You get 1,600 stores, and your 28 billion worth of equity that we give you is ultimately going to be. Oh, it says like my stream keeps cutting out. It's getting worse. Oh no. That cord, huh? Well, let me switch to my oh, it's on my hotspot. Good night, Paul. Hey, is the internet connection any better? What's up, CDJ? CDJ says I was here. Okay, it's better. Sorry, I was not on my Wi-Fi, which sometimes my Wi-Fi does fail me. My streams are a problem. What is an Ethernet cord, by the way, Some Grady? Just kidding. I know what it is, but yeah, I probably need a monitor instead of a laptop. Parker, what are you doing here, dog? What is up, Parker? Hope you're doing well. Parker's my pal. Elliot. Yeah, we'll talk about dilution. We're gonna get there. Getting the latest scoops from J Train, Parker freaking Riem. Wow, I'm so tickled. Okay, let's keep going. Sorry that everything just cut out from my big old rant there. I did not realize that I was streaming from my hotspot this whole time. Little bit embarrassing. I apologize. Somehow I made it. How long did I make it in this thing? 55 minutes and 55 seconds before I switched over to Wi-Fi. Oh, here it is. Here's the quote I was trying to find earlier. It's not from their filings, but it is from this article, and Ryan's quoted as saying, "I'm going to be focused on eBay, and as personally involved as I have been in the GameStop turnaround for the next few years," Cohen said. So as far as we're going to purchase eBay and then on to the next one, I don't think it's on to the next one in 6 months. I think it's on to the next one in 5 years if everything goes great. You know? So that is that. We will dive into a couple of the high-level statements made in these, and then proxies, and then we'll start crunching some numbers on basically what does the dilution mean, right? What happens other than, man, what happens at market open? What happens this week? Max Payne was at 24 for this Friday. What do you think Max Payne's going to be at by the time we close Monday afternoon? You know what I mean? Hey, thanks, Jonathan. Jonathan says the cutting out has been a problem the whole stream, but it's not that annoying. Thank you, Jonathan. I do listen to some of my videos after the fact, and it is a problem. I agree with you guys. British is up at 4 a.m. Good morning, British. Granny says that the stream is just of my visorless head. What? You mean you're not seeing my my screen share? Is that what you're telling me? Is that what you're telling me, Grady? Stop share. Start share. How about now? Do you see a screen share now? Red King says, what did I miss? Jeremy, can you repeat everything you said? Probably. I probably can. WJP. Okay, we're now seeing the screen. WJP said, I was waiting for this video tomorrow. I had a tab open and happened to see the alert. I did catch the project name in the eBay docs is Project Sling. So let's get into some of the documents here. So Ryan Cohen tweeted the link to the following 3 documents that all basically thing. $125 per share is the proposed purchase price. Right now, eBay is at $117. So it's not a huge premium to where they are at right now. So on the surface, an eBay investor would say, why would I sell out for $125 a share when I'm already at $117 a share? And I already kind of talked a little bit about the eBay side of the psychology. We'll dive deeper into it in a specific video one day in the coming days or weeks. But the short answer is you're not really at 117. You're really at 100 maybe, but you're not even really at 100. You're probably more at 95. And then our influence has gotten you from 95 to 117. But even if you think you're a $100 billion company or $100 a share company, again, we're giving you 90 cents on the dollar for that 100, right? We're paying you 90% of this in equity, but then the last 10%, we're paying you 10 times the amount in cash, basically, or 5 times the amount. What is that? What does that basically come out to? 28 billion? Yeah, whatever. Basically, we're paying you 2 to 3 times in cash the amount for that last $10 a share. Anyways, they already own 5%. They're going to file a 13D tomorrow, which is exciting. 50% cash in GameStop. We'll get into that here soon. eBay, and then what is GameStop going to do? What's the big plan? GameStop actually doesn't talk that much about the big plan, the most exciting plan, right? All the synergies with the businesses. What GameStop mostly talks about in all 3 of these documents is, hey, we're going to do exactly what we with GameStop. And you know what that is? Cutting liabilities, improving gross margins, cutting SG&A, and all 3 of those together are going to dramatically increase net income. That's really all GameStop's promising. And then they're like, also, we're probably going to make more if you have 1,500 stores. Like it's probably going to be better for you. But what they're saying is, hey, you're spending a ton of money, $2.4 billion on sales and marketing, and you only added 1 million buyers net. So how about this? We're going to take $2 billion of costs out. $2 billion of your expenses are going out the door, and that's going to raise your earnings per share from $4.26 a share to $7.79 per share. And then, by the way, we're probably going to help you actually grow the business as well. And I'm going to be the CEO. Booyah. This is a more numbers presentation of the same information. And then this is all just like legalese. It's not really that important. And then this here is, again, some legalese. Here's the offer again in a slightly different presentation, but still, right, all the same exact numbers pretty much. Here's how we're going to cut costs. Here's what that does to EPS. Very nice and easy to see. It's the same information 3 different times. And then here is our value proposition. 1,600 US stores, a national network for authentication, intake, fulfillment, and live commerce. GameStop staff already inspects and grades hardware and trading cards every day. Sellers walk in, items are verified on spot, and listings carry a trust badge. So we can do authentication and intake. We can do fulfillment, right? Stores serve as drop-off and shipping nodes. They're not just stores, they're also decentralized warehouses. A national fulfillment network without incremental eBay CapEx. And then live commerce. Stores double as broadcasting studios. eBay supplies the inventory and the buyer base. GameStop supplies the physical footprint to compete in the live commerce category. Boom. Synergies. And then again, some more legalese. There you go. Let me hop back in the chat. But that's what has been said. And what I want to do is dive into what happens, right? What does the combined entity look like? Let's get into some of the financials. How excited should we be? Maybe start dabbling in a little bit also on what type of valuation do we give the potential combined entity? we're not going to get all the way through in this video, but as much as you have appetite for, I'm going to keep chugging along because that's the homework I have to be doing in the coming days anyways, is really valuing the combined entity and then also valuing what if it doesn't go through? And then what if it goes through, but it's delayed? As far as timing, this could take a year before Cohen is the CEO, GameStop owns all of eBay, right? It might not be super smooth. I don't think it will take that long, but it's certainly not like, oh, next week GameStop and eBay are going to be one company. It's not going to be that fast either. That said, the immediate term, as far as the coming weeks, are what is eBay's receptiveness to it? But then also from a technical basis, again, GameStop now has reason to begin pricing in upside beyond just its retail business, because this is not hearsay. This is they really posted this, right? This is real communication from their investor relations. This isn't even a Wall Street Journal article, right? This is Ryan Cohen signing the dotted line with his DocuSign, apparently. You know what I mean? This is legitimate. Oh, there you go. DocuSign envelope. Indeed. So with a company that has $9.4 billion in cash and cash equivalents, well, when they are not just saying, hey, soon we're going to buy something big, but they're like, no, this is what we want to buy. It's actually, this is how big it is. This is how soon we want to do it. All of a sudden you can start seeing why the asset management business would, even conservatively, would command a premium to just cash value. It's not just cash. And by the way, even if it is just cash, how much more cash could they raise, right? How much more money would someone loan them, right? That's the big question. Well, it's not a question anymore. We know that they've got $20 billion ready to be spent from TD, right? A high confident letter from TD Securities for up to $20 billion is attached. So if TD likes the deal, guess what? GameStop has $20 billion in financing ready to go. Well, right now they're a $12 billion company. A $12 billion company, which has $9.4 billion in cash and $20 billion in cash ready to deploy, even if eBay backs out or if somehow eBay's not the name. Again, you have legs to valuing cash above just the 5.4 in net book value. You have reason to say, I'm pretty sure this is going to dilute, because we're already right at the dilution conversion price for the 2.5 billion of the convertibles, and then the 1.7, and then the 1.9 from the warrants, right? It's a melt up situation even before eBay was announced. Even at 26.50, this was gaining more heat than it had in a long time. When the snowball keeps snowing, it's hard not to be excited about where the company can go. Let me catch up on the chat for a sec. Xbox Dude says, operationally, if eBay becomes the main thing, maybe future acquisitions that tie into eBay could happen fast without Cohen having to shift focus away from eBay. Definitely, like on a smaller scale, I do think they could continue buying, like eBay has been buying companies. You know, so when you're talking $1 billion, $2 billion, which a lot of the meme stock companies fit in that type of price range, honestly. if they're going to use the combined entity to then start scooping up a lot of maligned brands and become the retailer for all of those brands, I mean, that's pretty exciting to think about. I don't know how many of them would really make sense, but like, I don't know if Bath and Body Works is heading towards bankruptcy within a year or two, and this 7 billion is now 1 billion, or sorry, this 4.5 billion in market cap is now 1 billion in market cap. Well, that's a super recognizable brand. It's obviously very shippable. It's a lot of small stuff. Close all the stores, and then boom, now we're stacking things together. Petco, right, with a bunch of NOLs. Even like like a lot of the names have already crossed off because they didn't make sense for where GameStop was at for their first move. But a lot of the earlier names we had looked at in that 0 to 4 billion range could totally be added in and stacked with a ton of synergy to now a retail conglomerate that is very much national and also shipping international. I will try to talk about what happens to each ticker to answer your question. APJ and Lalaro. John Today says, somebody wake up Tony if those bonds convert. Yeah, seriously. That's funny. Boom, boom. Satellite says, here we are, Jeremy. Now the real fun begins. It's true. It's true. Which, by the way, thanks. 250 of you guys here on a Sunday night. Cheers. I haven't even had popcorn in like 45 minutes. That's my bad. That's my bad. I'm just trying to enjoy it. Y'all know I'm going to be doing nothing but crunching numbers and staring at this ticker all day tomorrow. Maybe I'll do something else. Maybe I'll go on a walk, do a little bit of work. But man, a lot of the work I got to do now is crunching the numbers of the combined entity, which I am about to get into, but we're going to get into it for real. Y'all might not find it that entertaining. I don't know. Peter says, we do have settlement from options from Friday. Exactly. Options in the money. 77,000 calls in the money. Actually, 78 from Friday. Do I think we'll be seeing some price suppression in the short term in light of coming swaps? I don't. I am prepared if so. Peter says, trying to figure out when to accumulate more. I think it's a lot of pressure on the buy side. A lot. Like there could be a dip, but dip now means like 25. You know what I mean? Like if you're back at 25, like I wouldn't be waiting till 22, And the reality is we could easily be at 29 and then 30, then 32, then 35. And once you're at 35, it's like, well, shoot, we could easily be at 40 and 45 and 60. Like how much does 35 pressure shorts becomes kind of the question. Peter says, if we get back at 25, I'm getting leaps, LOL. Yeah, I mean, it becomes a deep buy for sure, in my opinion, anyways. Bubble said, I really thought Ryan would have gone for PayPal or Target, and he still might. It's possible Target's what he wanted first, and they weren't really playing nice, or he's just like, you know what? I bet they're going to fail, so let them fail, and I'll come get them for half as much in a few years. Like even though Target is priced lower from a PE perspective, they don't have as much competitive advantages that are like highly durable as eBay does. And so ultimately, I think eBay probably was his number one pick, but it doesn't mean that he's not interested in a PayPal or a Target. By the way, so Peter says, I highly suspect Ryan has been buying eBay and has about 4.9% in options or something. So you're saying like in addition to GameStop. So GameStop has 5%, but you're saying I bet Ryan also has 4.9% himself, right? That's pretty, I mean, that, you know, I buy that. What's 5% of eBay? If he was buying it when they were at 90, when they were what, a $30 billion company, 10% of that would be $3 billion, 5% of that would be $1.5 billion. Yeah, I mean, it's possible. Jonathan said, wouldn't that be insider trading? It's a good question. If he did it early enough and it doesn't sell, then maybe not. But I don't know insider trading laws that well. But he wouldn't be an eBay insider. Like 5% is the threshold. So if you own 4.9%, you're not technically an insider. And so, and if he doesn't sell, then you can't really say that he was front running. You know, he bought 5% because he knew GameStop was going to buy 5%. And then he just sold after eBay popped when GameStop announced that GameStop owned. Like that would for sure be illegal if he sold right now. But if he was buying and he also knew GameStop was going to buy, but he's not selling, and GameStop was not an insider, like neither of them were insiders in eBay. So like you can buy as much as you want. I'm pretty sure. Bubbles wants some popcorn. That's what I'm saying. That's why I put it in the thumbnail so y'all can get some popcorn ready. Yeah, Xbox Dude says Ryan made the offer as GameStop CEO. It's GameStop's offer. Yeah, so GameStop has an offer to acquire eBay, and GameStop has a 5% position in eBay. What I'm discussing is, could it be possible that Ryan Cohen has 4.9% of eBay in addition to GameStop having 5%? So between the two of them, they have 9.9%. But guess what? 4.9% does not need to be disclosed. So it is, I think that is possible, is all I'm saying. That is true. WJP says, I could be wrong, but I feel like there was a note in one of the filings that Ryan Cohen Ventures might invest in the same things as GME. That's true. They put that in their 10Ks. But I think it's in all of them. So it's just, they have that disclosure there, though, you know, but I don't think it was like it. So yeah, it is, you know, it's something. It's a great comment. Great comment, WJP. That's why we're here. That's why we're here live, so we can learn together. Peter says, how would a shift from eBay to Target look like? Can they pivot if eBay doesn't pan out? I don't think they're going to. Like, to me, like, I mean, Peter says, I bet you it's a wild card. There is like, I'd say less, there's 2% of me that's like, I wonder if they somehow rope Target in also, and that this is like the Trojan horse, but eBay backs out and they're like, oh man, bummer. And then they actually go in heavy on Target. They would not own, if they own more than 5% of Target, they would have to disclose that this week. So, you know, it's possible, but I think Cohen really wants eBay. Oh, okay. Peter's saying Ryan Cohen Ventures buying eBay is the wild card. Yeah. I mean, that would be pretty great. Jay Card says, could eBay say, F you, Ryan Cohen, we will buy GME? Well, no. I mean, they can do everything that GameStop just did, but GameStop already has $9 billion in cash. eBay has negative net cash. They have more debt than they have cash. And ultimately, the shareholders have to approve it. And Ryan Cohen is the largest shareholder, but then you have a bunch of other GME shareholders. And I don't know, you guys, most of y'all probably are GME shareholders. Like, do you want Ryan Cohen to be bought out and the leaders of eBay to run your company? It's like, probably not, you know? So there's not the strategic alignment is still there, but the reality is Ryan Cohen's the one that had the vision for it, not eBay. So if eBay is like, hey, actually, we like your idea, now we're going to buy you. It's like, well, you kind of lost a lot of leverage because you just admitted that their leader is the better leader, you know? So, and yeah, they don't have the cash to do that. It doesn't mean they couldn't raise cash to do that, but you would still need GameStop to sell. And what would it cost to buy GameStop off of Ryan Cohen and co? You know, like if they offered I just don't think there's an offer that would make sense that would entice GameStop shareholders to say, yeah, I think actually this might be better for us, you know. Wally Wasper says, and we also have the power with GME due to ownership percentages. eBay is 90+% institutional. Yeah, whereas GameStop's a lot of retail. Bubble says, yeah, let eBay buy 5% of GME, LOL. Honestly, yeah, go ahead. Now, if eBay trying to fight GME triggers a GME short squeeze by adding a ton of buying pressure to GME, that'd be pretty great. That'd be pretty fun. I don't know if that's what they want to do, though, TBH. So, $125 a share, $56 billion. So good. Let's start thinking about the combined company, right? That's what we want to do. Let's do it. Let's do it here, actually. Oh no. Don't do it like that. Don't do it like that. eBay plus GME with a heart. Let's put a heart on it. Equals heart. British says, yeah, that's what we're here for. Magic Spreadsheet Man does his thing. Thanks, guys. eBay, 10K. Let's get a loose. This is going to be rough. It's going to get more. It's going to get more detailed as the weeks and days go on. Okay, 10Q is what I listened to. Boom. Financials, baby. Here we go. Here we go. Okay, we'll be more granular later. Let's try to get high level right here. Cash. You got 2.9 plus another 1. So you got $3 billion in cash. Let's start with eBay over here. eBay. Cash. 3. Sorry, the formatting is going to look all janky for now. What else? Receivables, current assets. So you got another 3.2 in current. Oh, plus another, those long-term investments are probably also like cash, aren't they? Like, yeah, just tell me about your investments. Okay, yeah. These are like bonds, T-bills, etc. Okay. So they've got another 2 in basically cash and securities, securitas, goodwill, boo, deferred tax assets. Okay, everything else is just everything else. So they got 18 in total assets, 5 of it's cash and securities. So they've got 13K in other assets. Boom. What else we got? Liabilities. Pooh, that's a lot of accounts accrued expenses. You only got 1.5 in receivables, but you got 2.5 in expenses. Lame-o. So we'll offset 1. Oh, and payable. Okay. Yeah. Okay. 6K in long-term debt, but I kind of want to add, well, I don't know. This 5K in current liabilities is right at the same 5K they have in cash and securities. So I'm going to say, I'm just going to describe their debt at 6 and then the rest of their liabilities at 6,500. Other liabilities. And then they've got book value. Look at all those retained earnings. Nice. Of the difference, of course, 18 minus 12. Oh, that's supposed to be 12.5. That's supposed to be 13.5. Way to go, me. So then they've got book value, stockholders' equity. She. You don't know what she means? It means stockholders' equity, baby. Let's go. Let's go. And then income statement, we want to check that out at a high level as well. Revenue of 3 billion. Let me just come over here. There you go. Boom. There's balance sheet. Revenue 3. Cost, so gross profit is 2,300. Well, we'll just say What else we got? Operating expenses, 1.7 for an income of 6. This, though, I probably actually want to annualize this. The balance sheet, it's nice to take from the most recent 10Q because you're getting the most current numbers. But the income and expenses, you really kind of want the annualized version. And they probably don't show you past 12 on the 10Q. So we might want to go back and check out their 10K from a couple months prior. Audra wonders if we'll see a dive on GameStop before 4 a.m. I don't think it makes, I don't think it's a good time to, if you're short, I don't think it's a good time to like cause a dip. If anything, you'd want to raise it high and then create bag holders by causing a dip after that. Like a run up to 32 or 35, make people think, oh my gosh, it's going to the moon. This is it. And then crash it from there. But crash it doesn't mean what it used to mean. Crash it used to mean we're down at $10 a share, or hey, we're at 40, now we're at 20, like cut it in half. Cut it in half is not possible anymore without basically triggering such immense buying pressure that you create a squeeze. So it's all a tighter range than it used to be. But right now we're breaking out to the upside. So yeah, will it come back at some point? A short attack at some point to bring it closer to 25 again, or maybe they even try to get it to 22. It's possible. Not to get too sidetracked though. Take me to item 8. Boom. I don't want to eat that. Here we go. Show me. Haha, annualized. Okay, 11, 1 on revenue. Cost was 3.1 for a gross profit of 8. Operating expenses of 5.6 for an income of 24. 2.4 bill. Oops. It's really 2.3 because it's really more like 5.7. Math. Okay, then we got some other things going on. Some interest income offsetting interest expense. Still just puts you at 23 though. Then you're looking at taxes, 300 mil in taxes. Puts you at 2 for net income. That's all we really care about, right? Yeah. Shares, when you're thinking about the combined entity, like per share doesn't really matter because shares are all getting bought out. This is your income statement, roughly, loosely, for eBay. Now, if you did the same thing for GME, And then so anyways, do we want to do GME here, or do we want to think about what are we paying? Let's think about what we're paying. We're talking about 56 billion, 55.5 billion. Purchase price. No, 55. These are all in billions. That's not true. They're in millions. Yeah, 300 million. Jeez. Paid in cash, paid in shares. So let's take, oh geez, don't do that. This paid in shares part, I kind of want to like, how many shares does it take, right? Becomes a pretty big question. Where do I want to put that? Maybe just over here. If GME is at what, 20? Let's do baseline. Let's call it 30 per share. And then let's look at what if we're at 35. 45, 60, and 100. Is there really any way that the pricing, I mean, we can do one for fun. Ballarat says, time to buy another power pack. Yeah, for real. Per share. This is all about like how much dilution. Let's just call this 40, 50, and then 75, 100. Okay. Gonna see 80 times what? There you go. There's 27.75 billion divided by $30 a share. Eee. Here it comes, guys. Oh, that's how many shares are getting made. Show it to me like, what's a comma? There you go. We're looking at anywhere from 277 million shares to as much as maybe 1 billion new shares in dilution. Not the lowest number you've ever seen. But to put it in context, right now, GameStop technically has 447 million shares. Technically, now that's a little bit deceiving because when you add in the convertibles, they're at 591. When you add in the warrants, they're at 650. When you add in Cohen's comp plan, they're at 822. 822 million shares currently exist of GME. If you want to say that dilution's already totally priced in. Technically, these don't all exist yet. Technically, none of these exist. There's only 447 right now. But if you want to say that all this, if dilution's already being priced in fully right now, then at $26.50 a share, you could say GameStop's already trading at $49 a share. If you're saying that dilution's already priced in. GameStop's already a $22 billion market cap if dilution's fully priced in. If dilution's fully priced in right now for the comp plan, the warrants, and the convertibles, that would mean that GameStop is already about a $25 billion market cap at $28.74. And that's 800 million shares. eBay right now is a $46 billion market cap. So almost double. Even if all the dilution's already priced in, eBay right now is twice as valuable as GameStop. And yet, how many shares are we going to be paying eBay to merge with GameStop? Look, probably less than 822. Probably. Again, if it's already pushing 29, if we get pricing day, if eBay tries to push this and it draws out after Q1 where Power Packs comes live, right? All the fundamentals that we've been talking about, the cash continues to snowball, etc. Worst case, you're looking at about a doubling in share count. Worst case, you're looking at about a doubling in share count for a company that's worth twice as much. Let me say it a different way. The combined entity, GameStop, right now, GameStop's equity is 33% of the pie. But they're going to be given 50% of the pie. Does that make sense? Y'all tracking with me? GameStop, and that's the most aggressive way, that's the most conservative way you could describe it. Again, that's if you're saying GameStop's already worth 25 billion, right? That's saying they're already at 29 a share and that 29 is already pricing in all of the dilution from convertibles and warrants and Ryan Cohen's compensation. All of that dilution. Okay, GameStop's a $25 billion company. Well, guess what? You're buying a $50 billion company. So 2/3 of the equity is only getting 50% of the equity. 2/3 of the equity is only getting 50% of the equity. That's eBay. Take your 2/3 and turn it into 1/2. Thank you very much. GameStop, 1/3 of the market cap, 1/3 of the equity value right now is getting 50% of the equity. How are they doing that? Because they're also adding cash, right? They're paying out 28 bill in debt. They say, go ahead, give us some debt. Go ahead and give us some operation risk. We ain't scared of that. But that's the most conservative way you could describe the dilution. If you want to say, hey, the comp plan's not already priced in, there's no way people are trading GameStop shares right now based on fully pricing in all of the dilution that comes from a $100 billion market cap. There's no way that's being fully priced in right now, which is true. There really is no way. Let's just go with, I don't know, their actual market cap right now. And let's say that dilution that happens 5 years from now isn't already being priced in. Let's just talk about the company right now. Okay, the company right now is a $12 billion company. And it's buying something for $56 billion. 12 plus 56 is 68. What is 12? What's 12? I did this with Target back in the day. Guess what, Target? You're no longer welcome here. Boom, baby. Equity. eBay is 56 of 68. Almost exactly the same size. Did y'all see that? 82.09 to 82.35. I mean, this is just crazy how similar. Anyways, GameStop is 12 of the 68 billion. If you just want to go off of current market cap, you should say that if GME purchases eBay through dilution, that GameStop shareholders should only be getting 17% of the combined company. But you know what GameStop shareholders will actually be getting? Again, it depends on what is the share price when they price the dilution. There's the Project Sling, by the way, up there. What's the share price when they price the dilution? If the share price is somewhere around 35 or so, which is probably most likely, it'll probably be somewhere around there. Well, then 17% of the market cap is going to end up with 50% of the equity. A 3x. A 3x in your concentration. And 82% of the market cap, in today's terms, is going to have to settle for only 50% of the equity of the combined company. So I'd much rather own, if you're going to buy stock to play this merger opportunity, your stock upside is much higher on the GME side of the coin than the eBay side of the coin, but your floor is much higher on the eBay side of the coin, because on top of the 50% equity that you get from eBay, you also get 28 bill in cash. Like, you get 125 a share. What's the upside if you're an eBay holder right now? It's something around $125 a share, right? Plus exposure, right? Half of that is exposure to the combined entity upside, but half that's paid out in cash. Anyways, revenue-wise, these are no longer accurate. We'll get there later. So there's a little bit on dilution. Any other questions on dilution? For now, we'll get deeper into it. But did that make sense? May Parker says, explain it like I'm 5. I get that I get way diluted. Smaller part of the pie, but the pie is bigger. Do I have more pie? You might need to explain that to me like I'm 5. You end up with half as a GameStop holder. you end up with half of a $70 billion company instead of all of a $12 billion company. So you answer me, do you have more pie? Half of a $70 billion company or all of a $12 billion company? I'm just saying, it's pretty nice. Some people are really triggered by the word dilution. I'm like, look, I'm not trying to trigger anyone. The question, if you're a GameStop, this is the same conversations we had back when I thought it was Target, right? The question is, do you think that the combined company is worth more? Like, do you think an eBay purchase, Orange Guy, what's up, man? Do you think an eBay purchase adds value to GameStop to where it's not just the sum of its parts that, okay, right now it's a $70 billion company, but how much do you like eBay? Because now half of your company is eBay. And really, like, in a lot of ways, 4/5 of your company is eBay. But it's not eBay, it's eBay plus GameStop. If you really like GameStop as a shareholder, you probably would like eBay. It is a natural extension of the business that you already like. Collectibles, resale, right? And Ryan Cohen's leadership, obviously. But if you don't like eBay, then this isn't exciting for you because GameStop is depleting its cash, taking on a ton of debt. We'll see the terms on the debt. We don't know the interest rate yet. We can't model it all out. But they're taking on a ton of risk. They're dumping their cash pile and essentially YOLOing on eBay as the missing piece to unlock the value of GameStop stores. They're saying, hey, these stores become way more valuable with eBay. eBay becomes way more valuable with these stores. We'll take on the risk to see that bet pan out. If you don't believe that eBay adds value to GameStop stores, and if you don't think GameStop stores add value to eBay, then honestly, this is your selling point. Like, GameStop by itself can't do good enough to carry the weight of GameStop and eBay together, right? The deal has to work, right? Like, it has to work well for it to ultimately work well for investors. I'm not saying or else it'll be horrible, but I'm just saying if you're super bullish on GameStop for reasons that are unrelated to what eBay can magnify, then yeah, you wouldn't be excited. You'd be like Michael Burry. You'd say, like, man, I really wish they would have gone for something else. And that's totally cool to feel that way. I'm not trying to shame anyone. A couple questions here. Bubbles gets it. We'll have to wait and see where the share price goes to see how much dilution happens. He does wish he would have bought eBay shares last week. Yeah, I mean, like, if GameStop goes to 100 a share, now, I mean, you're talking about really, I mean, it's just pretty gangster. If GameStop's trading at $100 a share at the time of the pricing, which again, if enough retail rallies, if Roaring Kitty gets back in, if shorts get squeezed in some way, if that happens, now you're just talking about 277 million in shares diluted, which is still a lot. It's about a 30% increase in share count. But you're talking about GameStop shares representing 70% of the pie at that point. You're talking about the $12 billion company buying the $56 billion company. And when they combine, the 12 gets 70% of the pie. I mean, that is bonkers. Now, obviously, if GameStop's at $100 a share, guess what? It's not a $12 billion company, right? It's higher, right? It's a $48 billion company. So that's why they wouldn't have to dilute as much, is because the company would be more valuable. But if you're a troll on the internet trying to help out some old GME apes, it's like, man, wouldn't it be funny if a company that's been worth 10 billion for 5 years now on this day of the week happened to be worth 50 billion for the sake of the old apes out there? I mean, wouldn't that be fun if that just happened to be the case? Let's just trade at 100 today. We can trade at 30 tomorrow. Let's just trade at 100 today. Lock in how much of the pie goes to this 822 that's already going to happen, right? How much of the pie goes to legacy GameStop? How few shares do we need to print to pay 27 billion in cash equivalent? You know what I mean? So we won't know the dilution impact until that gets priced, but conservatively, you're looking at 50% of the pie for a company that's worth half as much. So it's a great deal no matter what, but it could be a crazy deal. It could be a crazy deal. They definitely have exposure to eBay. I don't think it's more than 5%, but they could increase it. But if they have more, I think it's probably through Ryan Cohen. We talked about that earlier in the stream. Tim, yeah, we'll get into like how do you price the combined entity. We'll get there. We haven't gotten there yet. Parker says, does the spent cash factor into the share price of GME? Spending the cash would decrease the price per share. No. Yeah, I mean that's two birds with one stone. Two comments on the same bird. That's 2 stones on one bird, y'all. That's savage. Everyone's talking about 2 birds with one stone. No one's talking about 2 stones on one bird. That's 2 stones on one bird. That's foul. I didn't even mean to be punny there. Like foul, like bird. Anyways, yeah, one of the questions that we need to get to is how do you value the combined entity? And yeah, a lot of cash goes out the door. So when you think about GameStop's fair value as a company, and you want to talk about, well, what is their value? Well, here's their net cash, which means here's the implied enterprise value, right? If their net cash all of a sudden goes from, let's just say convertibles and warrants dilute, okay? So let's just imagine that we're here. We can go ahead and price that in. We know that's basically inevitable. This 11.5 billion in net cash, let me get this back to how GameStop's currently trading. So right now, hypothetically, at $12 billion, if you're assuming the convertibles and warrants dilute, then you're looking at only 300 million of enterprise value. And almost all of GameStop's market cap is represented by its net cash, at least what will be net cash within the next 6 months. If you say we're going to spend 8 billion of that cash, what happens? Does the stock tank overnight? Well, not necessarily, because if this is how you're valuing the company right now, that means that you're valuing the current enterprise at a 0.72 PE, which no one is, right? It's definitely worth more than a 0.7 PE. But what happens, right? If net cash goes from 11.5, now you spent 8 off the jump, right? So then you say minus 8 billion. Well, now that means at 12 billion, the enterprise value is 8.3, right? There's only 3.5 left in net cash if you take out 8 billion, which means there's 8.3 of the 12 is what you're saying is GameStop's enterprise value. Well, what does that mean? That means you're giving it a 19 PE. It's like, okay, well, actually, I think we're okay, right? Like we can deploy that 8 billion, and assuming GameStop's trading comfortably over 32 when all of it shakes out, then your PE is still actually pretty conservative. And this is the current PE based on GameStop. This hasn't included in eBay yet. Where it gets interesting though is, wait, we're spending 8, but we're also taking on 20. Didn't we say that? I think we did say that. Well, what happens when now you have 20 billion in debt added into the picture? Well, now net cash is negative 16 billion. This is before you combine with eBay though. So there's like, maybe this looks slightly different, but we did up here. Sorry to distract for a second. They have 4.5 billion in book value, but cash wise, you're looking at actually another minus 1 billion from cash to debt, right? Net cash is negative 1 billion. Now, book value, I think, is probably a better proxy at the end of the day. But in these kind of fundamental floor valuation conversations, I've been focusing on the floor, which is why I've been using net cash. If you want to talk about floor, net cash, you're spending 8, you're raising 20 in debt, and then you're inheriting 1 billion from eBay, right? Of negative net cash. So you have negative 17 in net cash. Well, if you're a $12 billion company, right? 12 bill with negative 17 in net cash, that means your implied enterprise value is 29 billion. What does that give you from a PE perspective? That's a 67 PE. Well, that's not looking very good, right? It's not looking very good. However, again, you're taking on that 20 and you're spending that 8 and you're inheriting that 1, not in isolation, but for the addition of eBay. And enterprise value is no longer just the 12 billion of GameStop. It's also whatever eBay is valued at. Let's say it's 56 billion of market cap that you are now purchasing with eBay. If you want to add in 56 billion, it's going to make this look even crazier. Oh, what do I want to do here? Right? If you're a $12 billion company with negative 17 in cash, that means your enterprise value is 29 billion. But if you're a $68 billion company, right? 12 plus 56, let's just assume that eBay and GME combine and trade at the sum of what they're both at right now in after hours. I'm not saying that's what's going to happen, but if that happened, well, a $68 billion company with negative 17 billion in net cash is an implied enterprise value of 85 billion, which puts their PE at 194, except that we haven't added in eBay's E, right? What is their E? We're looking for operating income, right? 2,300, 2.3 bill in operating income on top of the 400 mil that US and Australia is already probably doing at that point. Let's call it 25, assuming they're trending in the right direction, which they are. So after Q2 numbers reported in September, trailing 12-month, right, annualized operating income for eBay, let's say it's at about 2.5 bill. Altogether, with negative 17 bill in net cash, a 68 bill market cap, implying an 85 bill enterprise value, when you look at trailing 12-month operating income with the combined entity, you are at a 29 PE. A 29 PE. Is that super high? No, it's not super high. Is there room to go down from there? Sure, there's room to go down from there. Right now, eBay is at a 23, and right now, GameStop, they say they're at a 34, but their enterprise PE is really more at like a 10 right now. So if 12 billion, to answer Parker's question, the two stones that went to the same bird, which are basically asking, doesn't GameStop's value go down if they spend 8 billion in cash? It really comes down to, how do you value what they're spending it on? Do you think they're getting dollar for dollar everything that they're buying? And that 20 bill that they're taking on in debt, do you think they're getting dollar for dollar everything that you're buying? And maybe more, right? 29 would put you right at the S&P 500, I think. Do they say it here, or do I have to look it up? Oh, you're not going to tell me here. What is it right now? It was at 31 a few months ago. What is the PE of the SPY? Okay, it's at a 28.6, maybe a 27.5. In the retail industry specifically, right, if you're looking at an Amazon, right, if that's who we're going to compete with, what's Amazon's PE right now? Probably about a 33, 32 PE for Amazon, right? If you're looking at Walmart, if that's who we're competing with, what is Walmart's PE right now? 48. Right? So the mega retailers, even your smaller one, what's Etsy at? Much different, much lower scale, but still peer-to-peer. They're at a 26. So all that to say, could the combined entity, even in spite of 8 bill in cash sent out the door, 20 bill in debt raised, inheriting another bill in net cash negative, could it withstand a 29 PE? Definitely could. That said, this is also all still net cash. You could be using book value instead of net cash. How would that change the conversation? Well, from eBay's perspective, you'd be adding in 45 hundo, 4.5 bill in book value that is in excess of their net. Really, you'd be adding 5.5, right? You're going from -1 in net cash to a positive 5.5 in book value. That said, I would be a little cautious in doing that if I were you. because 4.4 bill of their assets are goodwill, which is what's called an intangible asset. They're definitely still worth something, but they're not as nice as other things. That's why some people look at cash and they don't like to value other things that, when liquidated in a worst case scenario, are not worth nearly what their book value statement would claim. However, let's finish this exercise. If you add in eBay's book value, in the book value that's in excess of their net cash, that's 5.5 billion. As for GameStop, their book value that's in excess of their cash is about 300 million. You put them together, that's 5.8 billion in book value. If you wanted to change this from net cash to book value, you add in 5.8 billion. All of a sudden, their new book value is negative 11.6. So if they stay at a $68 billion market cap, which we don't even know if that's going to be their combined market cap, their market cap could be higher or lower. But we're just saying, where does it go from here? Because right now they're at 12, and let's just assume eBay gets to 125, which they, oh, geez. I was like, they just crashed to 63. No, it's because I went to Etsy. Let's say they sell at 125. Let's say they hold. And do they hold? Well, net of book value, that would mean 80 bill in implied enterprise value. That's a 27 PE. Do I think they hold that? I mean, they certainly could. And if any part of this acquisition process forces any type of extreme volatility on either eBay or GameStop, but especially you would think GameStop, right? If this triggers any type of short closure, whatever, you would kind of think that gives an opportunity for GameStop to take advantage of. That could raise their floor, right? They could maybe even raise new or like issue new warrants at even higher tranches, issue new convertibles and expire some of the old ones, right? They could do an ATM like we discussed earlier. Also, again, any synergy between GameStop and eBay. Right now, separately, eBay's been given about a 20 PE, GameStop's been given about a 15 PE. Together, how much more valuable are they? And does it justify a PE higher in terms of a 27, 28, 29? And then where can it go from there? It's all the questions. Okay. Hopefully that was satisfactory. Let me catch back up on the chat here. Woo, it's 11:30. It's 11:30. Wally Wasper says, like, don't they need to spend the rest of the money to get to 125 a share? Again, 50% is paid in cash, 50% is just paid in dilution. We'll talk about it more thoroughly in coming videos, but no, they don't have to like buy. They don't have to spend 95% of the market cap at 125 per share. They have to spend 50%, which is that 28 bill that we just discussed. The rest is diluted. Jason's asking me, if someone already has GME stock, does it also make sense to buy some eBay stock to invest in eBay under Ryan Cohen's leadership? Or does it make sense to buy more GME? Obviously, that depends a ton on your personal risk tolerance and investment goals, etc. I said this in my video on Friday, but like for the money that I manage for my clients, like they've owned eBay for a large portion of my tenure as their advisor. I closed out of their eBay position somewhere around eBay approaching 100 a share. because I felt like that was a little rich for eBay's business. And I didn't think GameStop was going to buy eBay. It turns out the reason that eBay was surpassing 90 and 100 a share is because GameStop is indeed interested in buying eBay. So I reopened a small position within my client accounts for eBay, but that's because I consider my clients' GameStop exposure already maxed out. So I'm not adding to an already substantial concentration of stocks and warrants for my clients. And so in that case, it makes sense to say, hey, eBay gives you a little bit of more exposure to the collectibles play. And now that there's the prospect of Ryan Cohen's leadership, does that make a company that's in a fast-growing sector, well-positioned, only at a 23 PE, does that make that actually an attractive buy? And I basically trimmed a client position in Target, which is what I thought GameStop would buy, trimmed that position and replaced that portion of that position with an eBay position. But ultimately, if you're purely excited about this from the GameStop angle and you're saying, hey, what do you think I should buy? What's your favorite company? My favorite company is still GameStop. So hopefully that answers your question. Moth says, if eBay was immediately receptive to the proposal, how fast before Ryan Cohen could become CEO? I'd say like June 8th. I don't think it happened before June 8th because we got to get that vote done. You know what I mean? Like it could be agreed to in principle within the month of May, but I don't think it's official until June because he's got to get that stock comp plan figured out. You know, he's trying to steal that bag for sure. Audra says, how long do you think it will take to reach the 3X? GameStop could totally 3X in the next 3 weeks. As far as does this acquisition news combined with the technicals and gamma ramp we've already seen, does that add enough hype to the name to force intense volatility like we haven't seen in a long time? Now, for GameStop to sustain a 3X, a lot of that's going to come down to what is the pricing for the dilution, right? How many more shares are getting created? Because we're talking about, this is a 3X difference right here, just in share count. You know, so if we're talking about on a price per share basis, you know, how long does it take GameStop to grow to whatever? It's like, well, if they're doing it with 1 billion shares, that's a lot different than doing it with 2 billion shares. You know, it's a big factor. So the terms of this deal will matter a lot. If retail hype mania, roaring kitty, like if squeeze activity comes back, that will matter a lot. As far as like just the general combined entity, I think the cost cutting will be pretty aggressive, which again, if you're talking about 27 PE, if you're going off of book value, like if we want to get more conservative again, call it net cash, take out that 5.8, you're looking at 29 PE combined company 2 months from now. But again, let's go back to the proposal. He's saying we are cutting costs by $2 billion within 1 year. So what if he does do that within 1 year? Well, this becomes not the 2.5. This becomes 4.5, right? And by the way, GameStop's earnings, if you want to look a year out from now, will also be higher than the 439, but let's just say that's what it is. All of a sudden, you're already back to a 17 PE company just based on the cost cutting that Cohen thinks he can do, which, by the way, is another one of the reasons I thought he might be interested in Target, but makes even more sense from eBay, is I said, man, he wants to cut costs. What's the easiest way to cut costs? Well, how about you take a company that's in Minneapolis and you make its headquarters in Texas, right? How about you take a company, which that's Target, but with eBay, geez, I don't know, headquartered in San Jose, California. Well, look, none of them give you the tech stock love out there anyways. So guess what? All you Californians, you're fired. In California, you're fired. And you know how much cheaper it's going to be to replace some of those middle management names in Texas on a salary basis? And then you know how much we're paying in income tax in Texas compared to California, right? The cost cutting is like the first 500 million is going to be easy from their cost cutting. And that's a big difference. You know, like that, a 17 PE is a lot different than a 27 PE or a 29 PE. And if they're at a 17 forward PE, like, man, all of a sudden, then the question is, well, what about the synergy? If they're trading at a 17 just based on the cost cutting, well, what if the synergy actually moves the needle? What if they actually are worth a 29? Cost cutting gets them back to a 17, but what if they're worth a 29? Well, if they're worth a 29, then again, two stones on the same bird. The question is, how do you value the combined entity? And it might be worth more than 12 plus 56, right? If you think he can accomplish this cost cutting, then what type of forward PE are you comfortable paying? What type of added premium do you give that? Let's say they get an extra 10 billion. That only gets them to a 19 PE. An extra 20 billion puts them at a 21. A 21 forward PE is probably a closer to appropriate number. And then it could be higher, right? But you're looking at a company that you take GameStop's 12, eBay's 56, combine it at 68, and you're saying the combined company, right, really might be worth more like 88. Like, take 20 bill on top of that to bring the forward PE to a 21, and let's see Ryan Cohen cook. And that's overnight, right? That's fair value today, for example. If they continue to execute, fair value continues to raise higher, right? If they cut costs even faster, fair value becomes that much better, that much faster. And if the synergies become more obvious, and by the way, all that retail mania, that buying hype, all of this could really convert to eBay sales and activity and stuff too, not just stock squeezes, but stock squeezes could also roll into power packs and eBay purchases, right? It could become a glorious flywheel of the retail investor and the retail reseller continuing to give back to one another. So, anyways, as far as a 3x upside, if GameStop's at it right now, they're a $12 billion company. If they are given 50% of a $68 billion company, that's $34 billion. So they've already 3x'd, right? If GameStop holds value, they've already 3x'd. So that, I mean, it would happen at the time of the sale. But if it's actually a $90 billion company that GameStop has 50% of, and again, that 50% of number, I'm talking about the share count from the dilution that happens. So GameStop technically would own 100% of it. The question is, how many total shares are in existence? How many shares are paid out to eBay holders? If it's 822 million shares paid out to eBay holders at the end of the day, AKA if GameStop's around 35 a share at the time of the dilution, then GameStop shareholders would have 50% of the combined company. My brain's starting to slow down. If you think it's closer to a $90 billion company, that means it's worth, 45 billion is attributable to GameStop, originally GameStop owned shares that originally were going for $12 billion. So that's almost a 4x that could happen quite soon. If you're talking about a 10x, 15x, at that point you're going to need to go beyond fundamentals if you're talking about super soon and go more into, well, what if the fundamentals raise the floor enough to where the technicals kick into gear and we start to see some exciting price action again? So that's what I would say to that, Audra. If you're even still here, Audra, are you guys still here? It's 11:40. I've been here for 2.5 hours. Are y'all still here? Tim Sneed said, if we're going into a cycle and pull this off with slight dilution, yeah, so the FTD cycle, the swaps, the technicals, if GameStop pops and that's when the pricing happens, he said, I will be blown away. Oh, he said, I'll be blown the F away. Yeah. I mean, it would be such a masterclass. Honestly, such a masterclass. John says, I just hope on the other side of the coin, he says, I just hope we don't dilute so much that we become a $100 billion company at 28 per share. Yeah. So, people don't like the word dilution. And at the end of the day, I try to illustrate it well and say, hey, eBay's right now, we're offering 56 billion. Even if you think they're only worth 36 billion, you know what 36 is? 3 times more than 12. It's 3 times more than 12. So if they're worth 3/4 of the combined company and you get 50% of the combined company, you're better off for that dilution. You diluted, but you got more pie. So it really just comes down to how do you value what you're buying and how much did you have to pay for it? And you can buy your way into even bigger amounts of pie, even net of quote unquote dilution. Peter asked me what time frames do I anticipate the buyout to happen. So I think eBay will fight it, but I think no sooner than June. But we might get verbal agreement in May if eBay doesn't fight it. If eBay fights it, I think it's still going to happen before October. I don't think Cohen's trying to put the warrants on the line or I think he's trying to move quick. So honestly, I think May, June, July, I think if it's not official by July, I think it will be known. Like Cohen, when he filed this in November, he wasn't officially added to the board right away, but he bought such a huge percentage that it's like, I'm pretty sure he's coming for real. And then he got added to the board, but he didn't get to fire everyone right away. But then he did, and he got to hire new people, right? But then he wasn't the CEO right away, but then he was. And so what I'm saying is the question is how long did it take to go from this to it's inevitable? When RC posts this, it's not a done deal. It just means he's talking for real. He means business. Take Cohen for how long until this became inevitable? I would say it's when he joined the board. When Cohen joined the board, it seemed pretty clear he's going to take over the company. It's just a matter of time. So that's kind of the equivalent. And that happened, I think, in January. Do you know, Google? Why don't I know that? When did Ryan Cohen join the board of GameStop? Yeah, January 2021. He joins the board. 2 weeks later, it squeezes, sneezes, whatever. In June, he became chairman of the board, but I think the reason why it felt inevitable in January is because of the sneeze that happened 2 weeks later. It's like, okay, well, obviously Cohen he's running the show now. If we don't see so anyways, that is about within 2 months. Really within 6 weeks, November 20th, or sorry, 7, 8 weeks. So I would think within 7 or 8 weeks, this is known. He's either leaning in, pressing in, forcing his way in, and it's obvious he's not going to lose, or he drops it hot like he did Bed Bath & Beyond. When did he do that? How long was that? When did Ryan Cohen buy and sell BBBY? He bought in March, sold in August. So there you go. April, May, June, July, August. That's 5 months. But there was also no activity between that. Well, actually, he might have sent one other file. Maybe. But I think he posted a thing, initiated, and I don't think he said anything else until he sold. I don't remember exactly. So 2 to 5 months. 2 to 5 months. And I don't think it's 5. Because again, those warrants, it could be 5. I don't know. I think it's closer to 2 than 5. So there you go, Peter. Yeah, Timpson, if you want to talk about warrants, dilution, I might need to point you to some of my older videos. Simple Rick has some other ideas. Target, Best Buy, Sportsman Warehouse, Dave & Buster's, 1-800-Flowers, and Funko Pop. Add them all together. 1-800-Flowers. Yes, that's one of the names we looked at that actually one of you guys sent to me. It might have been you, Rick. I don't know. But one of you guys emailed me back when we were thinking about smaller names. This was a name that, well, whatever. I can't even find it right now. Forget it. Do I need a dash? There you go. This is a totally online business that's totally struggling, that makes some revenue. Anyways, there's all Funko's another great example of kind of a dying business that doesn't cost hardly anything. That, yeah, GameStop could totally start scooping lots of those up in addition to eBay if there's enough synergy, and if Cohen wants to lift the middle finger to enough short sellers, say, screw you guys, we're just going to be the company that freaking saves America and the world from predatory financial practices. And that's a great way to win some business, some customer loyalty. Like, the F does Amazon care about me and my family and my country? I don't know. But I know this guy does, because he takes all these companies that are about to die and then he makes them awesome. Right? So, it's an easy way to gain customers, especially if everyone knows the company's about to die. They're on the brink, like GameStop was. They're screwed until, oh, shoot, Cohen wants them. Oh, man, they're in the club now. Oh, dang. Charlie Sullivan says, getting 2 birds stoned. Who needs 2 stones at 1 bird when you can get 2 birds stoned? Jeez. How early could they make a decision? Okay, I think I've talked about that. But, they could make their decision this week. I'm pretty sure. Burgess Burgess. Yeah, Wendy's, another name. Doesn't, not quite as much synergy, but very meme worthy. Like I would I I would go buy a Frosty, Can't tell you the last time I've done that, but I would do it. Moon says accretive. I think that's how you pronounce that. Accretive or dilutive is the question. Weigh in. I have weighed in, so yeah, just once this live stream posts, you can see some of the numbers, but ultimately I think that they gain more than they lose in the dilution equation. And we'll be building out more of the, what do the combined financials look like and some price triggers. Again, I'm not going to be able to get into all of it here, but I will. That's for sure. Burgess says, morning, folks. Did something happen? John Curtis says, I'm just worried eBay's not worth $56 billion currently. Yeah, so I've kind of talked about that, but even if they're only worth 30, like what do you think they're worth? Even if they're only worth 30, GameStop's still getting more than their fair share, more than half of the pie for less than half of the market cap. And yeah, Jonathan says they're offering to pay a premium with the intent to maximize profits and make the joint company much more profitable. Yeah, that's the end of the game. Parker says, oh, sick. That was probably about some of the numbers. John Curtis says, I don't think Ryan Cohen's actually going to buy eBay. I think he bought shares knowing he could profit off the increase in price from the news of acquisition. And as several people commented, yes, that would be illegal. He cannot do that. Sorry, John. Sorry. SGN. Hey, great to see you. Half of a $70 billion company instead of all of a $12 billion company. Yay. Yay. Thanks for the response. Okay, I'm trying to catch up. Zedgy's here. Dolph Mendoza. Dolph Mendoza? Are you related? Are you related to Mendoza? You related? You asked what's a realistic squeeze price? I mean, as high as you want it to go. Like once I don't recommend, if you hold 100% of your net worth in GME, I don't recommend for 100% of that position to be playing the squeeze. I think whatever you can afford to allocate to that speculatively, you're welcome to. But I'm a fundamentals guy. I feel like the majority of your shares should be fundamentally backed. So the more interesting question for me is what's a realistic fundamental upside price? What's the highest that you could see this supporting fundamentally long term? And then the squeeze is just gravy. You just squeeze out the juice, but sometimes it's nice to know you got a lemon. War Hunger. Oh, that's awesome. Playing D4. Gotta love it. Arkantusa Compasco Weisgit said, Jeremy, did you know that eBay currently is 111% shares of held by institutions? I did see that posted somewhere. I think that is good news for GME and for the bull case, because eBay like one of the things that Ryan Cohen brings to the table is retail buying interests, which eBay doesn't have any, right? And apparently there's also a demand for eBay shares in excess of their float by institutions, which is probably good also. Placer said they're worth a lot more. Sorry, Placer said that Cohen said they're worth a lot more. It's true. And yeah, GameStop will be added to the S&P 500. Crazy to imagine the impact of that. Obviously, it was hugely impactful for Tesla back in the days that when that happened. The impact of that really comes down to what's GameStop's market cap and how much short interest is out there. And for GameStop, and Patrick actually asked a great question. Can you steel man an argument of how this goes badly? So I'll try to get to that in a sec. But GameStop being added to the S&P 500, the more that GameStop is worth when it gets added, the better for the squeeze potential, because the more money has to be put into like GME. If GME barely scratches the surface of the S&P 500 and it's 0.01% of the SPY, well, yeah, then anyone that's tracking the SPY, like those institutions, have to buy if they want to track the SPY. But if it's only 0.001%, do they even really have to buy it? Like, do they really care that much about, like, if that, it's such a little amount that it's just not as big of an impact on the stock. And the institution could even think about, what if we wait until later to buy it, right? It's not going to move the needle for our tracking because it's such a small position. If it's 1% of the SPY, then that's a huge, they can't wait. They have to do it now because it's going to impact whether their index is actually tracking the S&P 500 or not. And it's that much more in dollar amount in terms of like buying pressure on the stock. So to buy eBay and then be approved, long story short, much better than to fundamentally execute for a few more quarters and then be approved as you just kind of cross over the threshold. Whew. It's midnight. Cheers, guys, by the way. Cheers. Oh, check it out. I got my BR Legacy mug. It's cool. I'm winding down. Let's talk about how could this go badly, and then we'll try to wrap this up. Oh, I forgot about my popcorn again. It's kind of starting to get chewy now. Okay, how does it go badly? Well, any reason to think that eBay sellers, Hermit says, there's the popcorn. Any reason eBay sellers would revolt, that they wouldn't use the platform anymore, that buyers wouldn't want to buy from eBay anymore. Jonathan, thanks for being here. And thanks also for the GOAT trophy. That was like the coolest thing that happened to me today for sure. So I appreciate it. I don't think that's reasonable. I don't know any reason why the users of the platform would have that negative reaction to Cohen buying the company, unless it creates such a huge retail mania, huge squeeze, crashes financial markets type of squeeze, and then they feel like they need to take a stand against GameStop and GameStop gets scapegoated as destroying the world. If that happens, though, you're not really worried about it as a GameStop investor because that means GameStop just made a crap ton of money. Like a lot. If everyone hates GameStop because GameStop made so much money, that's not a problem. Right? So I don't think there's a risk of eBay losing traction with its existing user base. And there's no way that they don't, at least incrementally, add to the products available. Like the quantity of listings, quantity of users, maybe even on the sell side or buy side. Like there's no way that 1,600 stores fails to move the needle on inventory. There's no way. They have no stores. It's all just like when I sell stuff on eBay, it's just because I decided to do the work to sell some stuff on eBay. And I said this on Friday, but I've sold about $100,000 worth of stuff on eBay. Like I've used the platform a lot, and I'm very familiar. And I've consigned for other people. I've hired myself out as an eBay seller at times. So, what am I talking about? Oh, geez. Oh, 1,600 stores. Like revenue, I don't know like how much. We didn't get honestly very deep into eBay's financials in this video. But revenue is already generally trending up as it is, but which is in and of itself a good sign. Like when you're thinking about what could go wrong, I'm thinking about how does GameStop's partnership with eBay go wrong? So far, I haven't found any. But you're also like, what could go wrong with eBay? What could go wrong with eBay is that someone else builds a auction site. And so far, eBay's only like defense against that has been to buy them all. And that doesn't work forever. You will lose if you have no like if you have no creativity, if you have no like vision, and every time a competitor has a better idea, all you do is just buy them for a premium, eventually someone won't sell to you and then you're screwed. And also, again, Amazon, Walmart already have peer-to-peer marketplaces. Will sellers just flock more and more there rather than eBay? It's so like that said, if GameStop buys eBay, that wouldn't happen because GameStop wants to be very forward on the trends of retail with live selling. Without GameStop, eBay's revenue is going up, but their income from operations actually went down, right? They made 900 million more in revenue, but actually 100 million less in income. So they need some of that cost cutting. Costs are rising a little faster than they want. So again, without Cohen, does eBay have some reasons for concern? Yes. And again, that's why for my clients, back when I had bought eBay for them at the turn of the year at like $55 a share. Where were they? Oh, they're at 80. Yeah, $80 a share eBay. When it became $95, $100 a share eBay, I'm like, I listen to their earnings calls. I'm looking at their numbers, and they're not crazy good. I'm looking at their balance sheet. It's not crazy good. And it seems kind of ripe for disruption. It actually seems like it's been disrupted, but then they just buy out the disruptors. When you add Cohen into the leadership mix, now you start tapping into all the best things about eBay, and you're really mitigated against the dinosaur risk, because that's exactly what Cohen comes to destroy. It's what he did with Chewy. It's what he did with GameStop. It's what he wants to do with eBay. I want to take the dinosaur out of your business and turn it into the best version of itself it can be, because the best version of itself is a very valuable business. Indeed, Patrick, the leadership of eBay is sleepy. It's not as sleepy as I thought he would go for something even sleepier, but it is sleepy. It really is. So how does it go poorly? I mean, really, firing people, cutting costs. You're not really worried about that going poorly. Because again, all those people, they're not important. Like eBay is not like tech forward. Like this isn't like a unionized employees. When you're talking about the white collar, the SG&A, the management of eBay, like the employees of eBay are not employees, they're contractors. They are the sellers. They don't work for eBay. All the people that work for eBay, like if they want to demand, like they want to be pissy and we're not moving to Texas, great. You're going to get fired anyways. Like seriously, you're not that important. You know how many people will do that job? It's not that hard of a job. Like I don't actually know. No disrespect to anyone that works at eBay. I'm sure the jobs are hard. But it's not like, whatever. Tesla needs to have the best engineer, smartest brain, this AI startup, this company that, man, if they lose their talent in this area or that area or this, key man risk leader at this company, it's like, no, there's no key men. The key men are the sellers and the buyers. eBay's just been milking 15%. Like, hey, we built this website for you, so go ahead and pay us. Like they're almost more like a mafia than a real company. And Cohen's like, let's be a real company. Let's actually try to like grow for real and like make some money at the company. I'm not talking about you making money in stock comp. I'm not talking about your salary as the VP of whatever, the VP of 1-star reviews. I'm talking about let's make some money. Let's grow this thing. So honestly, I don't really see how it goes poorly, other than if you're talking about in terms of the stock, post acquisition, on one side of the coin is the S&P 500 inclusion. That is inevitable eventually, but is not immediate. It has to be approved. So when that hasn't happened yet, and now the acquisition has gone through, and GameStop has $20 billion more in debt, $8 billion less in cash, and they're not in the S&P 500 yet. And people think they overpaid by 35% of this new company, eBay. The stock could totally get hammered after that. Now, the warrants would have already diluted. Like, we're not worried about the warrants and convertibles. Those are chilling. But I'm saying turn of the year, right? Okay, you get your warrants. Go ahead, let's dilute it all. Okay, cool. Now you've added hundreds of millions of shares in dilution across the board. And there's no numbers yet for even the first quarter of eBay. How much is it going to cost to move operations from San Jose to Dallas? So now you have all these expenses. Drum up a little news story here or there of this seller that's pissed off, or, you know, Ryan Cohen's cousin that used to work for someone who used to know someone that said something mean about eBay. And now it's a story. Like, you could see a short attack on the stock after what will probably be like a run up over these next 6 weeks. You could see a short attack. And that's going to be based on valuations and arguments and all of that. Long term, though, is there a way it goes bad? Like, eBay would have to, like, there's no way they're not going to be able to cut costs. Like, they will save money. Will cutting costs hurt their revenue? Probably not. At least not when offset by the fact that they have 1,600 new stores. So even if some of the marketing loses some of the revenue from that marketing, guess what? 1,600 stores is marketing you don't have to pay for. So let's just do this free marketing over here called We Have Stores, you know? So I think there's no way it doesn't work. The only question is then, like, how big does the pie get? How much does the company grow? You can cut costs, and we just did the numbers and said, okay, this within a year, this could be at a, even at the $56 billion valuation for eBay and 12 of GameStop, even after all the debt, like, this could be easily a $70 billion company at a 17 PE. Like, this could still be a deep value. You know what I mean? But that doesn't mean that in 5 years, it's going to be worth 10 times more. There's still, like, okay, after you do the cost cutting part, that buys you 10 to 30 billion of market cap. And at that point, Ryan Cohen might not care, because guess what? If you take 70 billion and you add 30 billion, that's 100 billion. And that's his highest tranche. Literally, even if the synergy is pretty mid, Cohen gets his bag. So that's the big, if you wanted to really be a downer, that is the risk, is that Cohen doesn't have a vision for a $500 billion company, and he really only just wants to get that 100. I don't think that's the case, because he said in his Wall Street Journal article that he thinks eBay should be worth hundreds of millions of dollars, or hundreds of billions of dollars. Hundreds. But post eBay, it's probably not a squeeze. Pre-eBay, it might be a squeeze. Post eBay, it's probably not a squeeze. It's probably it probably gets almost like a normal company. You know what I mean? That, like, most days it goes up, some days it goes down. It's worth a lot more than it was before this transformation. But now we're just trying to clip 20% each year, and we're on our way. And, maybe some years will grow faster, maybe some years will grow slower. Like, we'll see. I think Cohen probably has a lot up his sleeve. And honestly, I'm kind of running out of steam, like I said. Not sure if anything I'm saying is even making sense. But I don't see a big risk like, oh, like when Cohen said, like, if this doesn't work out, it's going to look totally, totally foolish. I think Target could have looked totally, totally foolish. I don't think eBay really, I don't think the downside is that low. It just becomes a question of how long does it take? How high can it go? That's really the only question. The rare, thanks for the comment. Thanks for being here. He says, I was referring to one of the Roaring Kitty videos, basically saying there's no bear thesis, but bears will tank the stock to cover. I think this is the quote first tranche of good news. Could be. Moth said totally foolish part of the article was a smoke screen, in his opinion. I do think there were some smoke screen elements. And to be fair, Ryan Cohen said in his first ever statement, from this point forward, don't judge me by what I say, judge me by my actions. His actions have indicated that the resale business and the collectibles business are what he wants to expand, and even that eBay specifically is a company he's interested in working with. And all the tea leaves were there, and that's why honestly a lot of people, like, it was highly speculated from the beginning, like, could it be eBay? But I think because he knew of those obvious synergies, I think some of his article was smokescreenish to get anyone that's too familiar with the matter to second guess themselves so that they can build the position they need to in eBay before coming public with all of this. I agree, John Today. Buying eBay just to try to get the golden parachute is the most opposite of Ryan Cohen thing he's ever heard. Ryan Cohen has proved the exact opposite by his actions. Just wouldn't make any sense. I agree. I don't think he will do that. I'm just saying if you want to be like really bearish on this eBay acquisition idea, all you can really say is like, what if? What if he cuts costs? And even then, it's not bad. It's just like, it's not that exciting. It's like, okay, that'll be this would be the exciting part, but it doesn't necessarily stay exciting forever. But again, I don't think that's likely. And I don't think if you feared that, like, what probability do you want to put on that? I think a 20% chance is about as aggressive, as you could get. It's probably more like a 5% or less chance that he would do that. Herman Hanna says, what do you think the biggest upside of this whole thing is? The biggest needle mover? Ultimately, for me, it's graded cards. And essentially owning a monopoly on the graded card market. And graded cards as a market growing at 100% year over year for 10 plus years, like, it's very possible. And if that happens, the company that owns the market is going to make a crap ton. So, I mean, that's the biggest upside is on the back of the industry that you're the best positioned in by far, with huge moats. Like no one would be able to recreate it. But then there are still several bullish things apart from that as well. But I think that's the biggest needle mover. And together with power packs as well on the kind of dopamine gambling side of things. Even if eBay doesn't execute crazy good crazy well, if GameStop doesn't execute crazy well, if collectibles continues to grow as fast as they are, which will happen if governments continue to print money as fast as they are, inflation keeps doing what it's doing, and wealth continues to increase throughout the world in general, the demand for store of value assets is going higher and higher. And ultimately, that is a tide that lifts all ships, but none more than eBay plus GameStop. The only ship you could argue would lift even more would be PSA. And it's like, look, we don't own PSA. They're private and they're not selling. So maybe one day, but I don't think GameStop wants to own PSA. I think it's better for both of them if they're separate to avoid any conflict of interest with grading practices. Yeah, things in general could definitely go great. Yeah, Arkadushka Bashkowicz says the biggest mover would be GameStop using its stores as breaking hubs on eBay Live and do live breaks and media hype. Totally. I mean, that's another huge angle for sure. But live breaks, like, what's the most popular thing that people buy on live breaks? Probably like ripping packs and stuff. I don't know. There's a lot of synergy there. But yeah, I don't think that's the biggest needle mover, but I think that's the easiest one. Is the live breaks in stores and the purchases of stuff in stores, way more inventory. Could Jimmy acquire more companies? If eBay says no, will Ryan go hostile? Okay, we're starting to get some repeat questions. It's almost 12:30. Yes, Ryan Cohen will go hostile. And yes, he could acquire more companies, but probably won't for a while unless they are small ones that are well-known brands that are not actually that expensive of companies to kind of add to his folklore as a meme lord, and more importantly, his genuine service to the world as in saving, otherwise dying companies and resurrecting their value and delighting their customers and shareholders. So, okay. Hopefully y'all learned something. I appreciate y'all being here. 200 of you guys still in here strong. Cheers. Tip of the cap. Hopefully you enjoyed some popcorn. That's all I got for y'all on this one. Hopefully, maybe I won't make a video tomorrow. Hopefully there's no huge news. I will be enjoying the price movement, but I want to leave this one up so that people have the opportunity to watch it, because I think we did cover a lot of ground in this video, and I want to do some more number crunching offline so that I can get a little deeper into it without y'all having to get bored out of your minds. Okay. Thank y'all for being here. That's all I got for you today. I will see you in the next one. Cheers.